So in this chapter, we're going to discuss investigating concealment. So in chapter 7, we talked about the Theft Act itself. And if you remember the fraud element triangle, there's the Theft Act, then there's the cover-up or the concealment, and then there's the conversion. So in chapter 9, we're going to talk about conversion. Chapter 8, we're talking about concealment. Now, it's good to remember chapter 7, 8, and 9, because when you do your individual project about a embezzlement case, you're going to want to talk about theft act investigation methods, concealment investigation methods, and then conversion investigation methods. So in chapter 8, we're going to talk about concealment. And this is where we spend most of the time as fraud examiners, is looking for evidence of concealment. And the learning objectives are to describe concealment investigation methods, understand the value of documents and electronic records, list the different methods of obtaining documentary evidence, understand how to perform discovery sampling, and then how to obtain hard-to-get documentary evidence. So concealment. So like we talked about, if a employee is stealing inventory from you, if they don't conceal it somehow, when they do the inventory counts, they're going to be different than what the accounting records show. And it's going to be obvious that somebody's stealing inventory. So what the perpetrator's got to do is somehow get rid of that inventory, write it off to an expense like scrap or obsolescence to show that the inventory is gone, so that when they do the counts, it doesn't the inventory doesn't show up missing. And so to be able to conceal it, they're probably going to create fake journal entries so that they can credit the inventory and then debit some type of expense. So, but when they produce that journal entry, they're going to have to produce some documentation for why they needed to debit scrap or debit obsolescence expense to get rid of the inventory. So the inventory is just one potential theft or embezzlement scheme. It could be that they're stealing customer checks as customers are paying their accounts receivable, and they've stolen the check, and so then now somehow they have to write the customer account off so that the customer doesn't complain when you keep calling them and tell them why they paid that inventory. And they're going to say, oh, we paid it with this check number. Then they'll get a copy of that canceled check and then find out that it was cashed by an employee of the company, not the company itself. So the employee who's stealing those checks needs to find a way to conceal it or to write off that inventory potentially to bad debt expense so that it disappears. So these are all different fraud schemes, either stealing inventory, stealing cash, that they then have to cover up, through some type of concealment. And there's going to be some type of manipulation of documentary evidence to conceal that, and that's what we're going to be looking for. So we'll talk about concealment and how this can be accomplished by modifying or deleting records in corporate databases, logs, and other communication. So the good thing about documentary evidence, and fraud investigators would prefer documentary evidence to testimonial evidence, to having a witness, because documents, like it says here, don't forget. They don't, like Roger Clemens, misremember things. They don't get events out of order. They can't be cross-examined or get confused on the stand. They can't commit perjury. They can't lie when they're on the stand. They don't tell inconsistent stories. So documentary evidence is ideal. I mean, obviously you'd like to have video evidence or like surveillance of the Theft Act itself. But if you don't have that, the next best thing is to have documentary evidence of the concealment. So, and like I said, this is better than having testimonial evidence because testimonial evidence is going to get cross-examined. People are going to forget things, and the defense attorney is going to bring all that out. But it's hard to argue with documentary evidence. And just to give you an idea of the type of evidence that you can gather, through documentary evidence, you could look at this copy of this canceled check, and from the canceled check, you can glean a lot of information. So, as we mentioned, the example that I gave before, if employees are stealing customer checks as they're paying their accounts receivable, they may take that check and then deposit it into one of their own accounts. Maybe they sign it over to themselves and then deposit it in their own account. Or maybe they've opened up an account with a similar name as the company name so they can deposit it. Well, the person who wrote the check, the customer, can get a copy of that canceled check. And if the company suspects fraud, they can ask the customer to get a copy of that canceled check and send it over to them. And as they search that canceled check, they can find, evidence that if it was signed over, it has an endorsement on the back where it was signed over to an employee, right? You can find out where the check was deposited, and whether it was cashed or deposited into somebody's bank account, right? Who actually did the deposit? Who actually cashed the check? You can find out when it was cashed. You can find out all that information from a copy of the check. So getting copies of canceled checks oftentimes produce a lot of meaningful information. And this slide just shows you all the different types of information that you can glean off of one document. So the other thing is investigators must understand the following aspects of documentary evidence. First, the chain of custody of documents. So as we mentioned before, forensic accounting is accounting for doing accounting and creating evidence that's potentially going to go to court. And so if your documentary evidence does eventually wind up in court, then you have to be able to show the courts that the evidence that you gathered has been in your custody and has not been altered since the time that you gathered it. So that's going to require marking the evidence, have an organizational method such that you can retrieve those documents when you need it. There's going to be coordination, so you're going to have similar to like libraries where they use the Dewey Decimal System. When you're gathering documentary evidence, you use what's called the Bates system, and each of your documents has a Bates number so that it can be easily organized and then coordinated as evidence. And we're going to discuss rules concerning when you can use an original document versus using photocopies of documents. Obviously, the courts want originals, but there are times when you can use photocopies. So, as we mentioned, the chain of custody of documents is vital. So you have to be able to show that the document, you have to be able to show the court, if it does wind up in court, that the document that you possess is the same document, unaltered from the time that you possessed it. And so that's why many forensic accountants come from law enforcement, because they have this knowledge of the chain of custody rules, and that when they gather evidence for investigation, they can get it easily admitted into court without having it be questioned. So for computer-based evidence, we want to use professional programs like InCase and the Forensic Toolkit, like we talked about in Chapter 7. And like I mentioned, when we get this documentary evidence, we need to mark the evidence. We're going to put a Bates number on it. Then we're going to put it in a transparent envelope. And then we're going to store it. And what we're going to use to conduct our investigation is just a copy of the document. And oftentimes now we just use an electronic copy of the document. So we take a picture of the document and we store it on the computer. And it's actually better than the olden days, because then it makes the documents easier to search. So what we'll do is we'll scan documents in. The system will take pictures of it that can actually read the document. And then if we want to search for the perpetrator's name through various documents, it's easier to find. And then we put the originals again in a plastic case, or plastic covering with the Bates number on it, so that if we need to pull it up for court, we have it, and we can show the court that this document's been in our possession the whole time and it's been unaltered from the time that we possessed it. So we want to be able to organize our evidence. And in the example here, in one case, and this is just one of many cases that like law enforcement works on, where the example here is you have 100 people working full-time for over a year to input keywords into a computer. So the documents could be called up on demand during a trial. So there's millions of documents. So you can see in cases like Enron and WorldCom where there would actually be millions and millions of documents that are related to this particular case. And that's not uncommon for large fraud cases to have, thousands, even millions of documents. And so that's why it's so much easier to scan documents now. And then with the technology is so good that somebody doesn't have to input keywords. They can just be scanned and then have the evidence in a data warehouse that's easy to sort. You can look for dates and look for names and look for times, etc., to find evidence throughout millions of documents. So as we mentioned, today's large case, it's common to have electronic files. And the FBI has Bureau Investigative Document Management and Analysis System, BIDMAS, for example. So you can put just millions and millions of documents stored online, and then it can be searched fairly easily. And then they can also send those documents electronically to other FBI offices around the country. So if you're doing if you're investigating a money laundering scheme and they seize documents, overseas, they can immediately scan them and send them to the FBI, and then they can be sorted and searched and compared to documents that were obtained, within the U.S. So it's extremely helpful with technology that we use now in conducting fraud investigations. So the evidence database where we store all our documents is going to have the dates that the documents were created, the source of the documents, where they came from. Did it come from the sales journal? Did this document come from the AR aging? Right? What are the dates the documents were obtained? So not just when the document was originated, but actually the dates that you obtained the documents. You put a brief description of the documents, in the database, the subject, and then put the identifying base numbers. Then it helps you coordinate your evidence, your documentary evidence, and then you can search electronically for information that's potentially in those documents. And like it says here, to remember that documents and electronic records are the backbone of concealment investigation, because most concealment methods involve altering or manipulating physical documents or computer records. So in a concealment case, like if the employee's stealing inventory from the company, and then they're trying to conceal that inventory theft, then they're going to have to create a journal entry to write that inventory off as some type of expense and possibly scrap. And then when they create that journal entry, they're going to have to provide some backup support explaining why they wrote that inventory off to scrap. And so if we see increase of scrap and we suspect that a company, that's because employees are stealing from us and then writing it off to scrap, then we would go pull those journal entries and look at the corresponding documents. And if we didn't see documents that were authorized, that there was authorization to write this inventory off to scrap, or it looks like the authorization was forged, there's going to be forged signatures on these documents to make it appear that these are legitimate, right? So we need to get a copy of these documents and then look at them and analyze them. And then there's potentially missing documents. The photocopies of documents are always suspicious, so we find that some inventory has been written off to scrap, and there's a photocopy of an authorization form. And the first question would be, well, what happened to the original authorization form? Well, maybe there was no original. The photo is from a different time inventory was written off to scrap, but they photocopied the document and changed the date and altered the photocopy. So all this would be documentary evidence that we would gather to show concealment of this inventory theft. Right? So these are other aspects of documentary evidence. So coordination of evidence. Some cases are small, that just involves a few people, but some cases like Enron and WorldCom provide large amounts of document. There's legal counsel, there's accountants, there's expert witness, there's management representatives that all need to be in the loop and potentially read documents over and over again. And then in this case, that's where the software that we've been talking about is extremely handy, because you can scan these documents in that allows you to search fairly easily. And the popular investigation analysis software is I2 Analyst Notebook, and then Xanalyst Link Explorer. Again, I'm not going to ask you to remember the names of those investigation analysis software, but just so you know that these are the types of software that fraud investigators use to search documentary evidence. So when can you use originals or use photocopies versus originals? Obviously, courts always want originals. And in certain jurisdictions, which is most jurisdictions, only the following 4 situations permit photocopies. So you can use a photocopy when the original document's been lost or it's been destroyed, right? And it's been destroyed without the intent or the fault of the person that's seeking that document. So the original document's gone. Obviously, then you could potentially rely on a photocopy. The original document's in the possession of an adverse party who won't give it up. So somebody else has that documentary evidence. Maybe they're in Colombia or in South America, somewhere else, and you can't produce that document, but you know it exists. And whoever has it won't give it to you. So the document or record is in the custody of a public office, so you can't get it. Again, you can't get it through the custody of the public office. And the original document is just too voluminous, it's just too big. And so if that's the case, you can bring in a summary to the courtroom. So those are primarily the only reasons why the court would allow you to show a photocopy in a court case versus the original. The best way to obtain documentary evidence is through computer-based queries of accounting and other databases. So what that means is that if we suspect, for example, that an employee is stealing our inventory and that they're able to write it off to scrap, then that's our hypothesis for what they're doing and how they're concealing it. Then what we do is we get a database where all of our journal entries are stored, and then we search debits to scrap, and we find journal entries where they've made debits to scrap expense. And then we look at those journal entries, and we try and find journal entries that we think would be even more suspicious, that are potentially made in the middle of the night by somebody who doesn't normally make journal entries. And so we find some journal entries that were made, during odd hours, and by people who don't normally make journal entries. And then we go from there. We go pull the documentary evidence. So we go get the backup support for those journal entries. And what we find then when we do that is potentially other suspicious documentary evidence, where we find missing documents where there is no support for that debit to scrap, or we find maybe a photocopy of an authorization to write something off to scrap, and we look closer at the photocopy and we're like, this looks like it's been altered, from the original. So again, the best way to obtain the documentary evidence is by doing the computer searches for the potential journal entries that we think are fraudulent, and then going and looking at the documents for the backup support for those fraudulent entries. Mentioned as a second bullet point is another useful method for obtaining documentary evidence is traditional audits. So in a traditional audit, we don't necessarily have predication to believe that there's a fraud going on. We're just doing our normal audit. So it comes time to audit scrap expense, and we randomly select some debits to scrap. And what we find is, we'll randomly select maybe 20 debits to scrap, and we find the corresponding journal entries. And 19 of those look like they have proper authorization to be written off to scrap. The backup support's all there. It looks authentic, but we find one where there's missing documents, or the documents is, like we described before, as a photocopy. And it looks like that photocopy is an alteration of the original. That might lead us to believe that there is something suspicious going on. And so that would move towards discovery sampling, where now we have reason to believe that maybe some of these journal entries to scrap are not legitimate. So then we would increase our sample size and look at more debits to scrap in journal entries, and then we would continue to look until potentially we would look at all of the journal entries to find out which ones potentially are fraudulent and which ones are not. So if we have predication and we suspect from the very beginning, and we hypothesize that somebody's stealing inventory and write it off to scrap, then we're going to do our computer query and look for journal entries that we think are the suspicious ones, looking for ones that were made in the middle of the night by somebody who doesn't normally make journal entries. But if we don't have predication and we're just doing a normal course of an audit, we're just testing scrap, and we look at some journal entries to scrap, and the documentation looks suspicious and raises red flags, then we would increase our sample and continue to look for more suspicious activity. Right? But that's how we would go about making selections and then finding the documentary evidence to support behind those potentially fraudulent journal. So auditors conduct 7 types of tests. So the first is testing for mechanical accuracy. And that's just recalculating. So for example, if we're concerned about the amount of depreciation expense that they're recording, and maybe we're concerned that they're not recording enough depreciation expense, then we just look at what their depreciation method is and just recalculate depreciation. So if they use straight line method, it's pretty straightforward to recalculate. The other type of evidence that we might gather are analytical tests, or tests of reasonableness. So we talked about this earlier when we were talking about potential liability fraud. For example, is what if they have interest expense that appears to be too high? So they have an interest rate, where they usually pay about 7% interest on their loans, but when they calculate the interest expense relative to the loans that they have, it's more like 17%. That might make us suspicious that they're paying interest on liabilities that are unrecorded. So that would be an analytical test to make us suspicious that there's unrecorded liabilities. Documentation is just like we're talking about. So that's where you get journal entries and then you find the corresponding documentation. In the case of WorldCom, when they were crediting expenses and just debiting fixed assets, so they were just taking expenses off the books and calling them fixed assets, the corresponding documents to back up those journal entries were just management memos saying that they were writing it off, or that they were taking those expenses and calling them fixed assets because those expenses, that the money that was previously expensed was actually prepaid capacity. So the documentation there was pretty weak to support such large journal entries. Right, confirmations are when, if we suspect that there's unrecorded liabilities, then we would send a confirmation to the bank to confirm that there are no other liabilities than what's reported on the confirmation. And we get that confirmation draft back directly from the bank. Or if we suspect that they're overstating their accounts receivable, then we send confirmations to a number of their customers to see if their customers will confirm that they do indeed owe that, that receivable. Then when that confirmation comes back, it essentially becomes documentary evidence. Right, observations, that's where we observe segregation of duties. Or, for example, if one of their internal controls says that they always have two people open envelopes when the mail comes in because they potentially receive checks from their customers, and so they always want two people to be there when they open up the mail in case cash is received. Well, you would observe that happening. Physical examination, that's when you're looking at evidence of that the inventory actually exists. So you're actually examining inventory and doing inventory counts with the client. And then inquiries are the most common type of evidence that auditors gather. It's also the least effective. I mean, we don't just take people's word for it that their inventory exists. We go count it. We don't take people's word for it that expenses decreased for the reason that they gave. We actually test those expenses. But we start off with inquiries. So if we see an unusual fluctuation, for example, in interest, or interest appears to be too high relative to the liabilities that they have, we would go inquire at management about why that might be. Why does it appear that they're paying so much interest relative to the liabilities that they have on their books, and give the client a chance to respond. So a lot of the evidence that we gather is inquiries, but we follow it up with evidence that's more solid. So, like it says here, because gathering documentation is a normal part of their work, auditors can also gather documentary evidence as part of the investigation without arising suspicion. So that's really helpful because when we're out conducting a fraud investigation, we don't tell them we're conducting an investigation. If we just use words like audit and sampling and similar words like that, then it doesn't arouse a suspicion of the people that we're potentially investigating. So if we just come in and say we're just doing a normal audit, that doesn't cause any concern. We don't want to throw words around like investigation. And during a normal course of the audit, as we mentioned, we may use discovery sampling, where we don't know if a fraud's occurring, but we really think, in the example that we gave before, that some of the scrap itself may not be legitimate. So they've written some inventory off to scrap, and so what we'll do is maybe they have 100 journal entries where they debit scrap and credit inventory. And so what we'll do is we won't test all 100 items right at once. We might test 20 items. And if we find 2 of those journal entries that look suspicious, where there's missing documentation to support that write-off, or the example we talked about earlier is that documentation appears to be forged, it's photocopies, then now we've said, okay, it looks like we've discovered 2 cases where this write-off to scrap looks suspicious. So then we'll do even more sampling. But if we do in our first 20 sample out of the 100, we don't find any evidence that anything looks suspicious and that the backup support all looks legitimate and doesn't raise any red flags, then maybe we stop because we didn't discover anything that looks suspicious. So discovery sampling is when we take an initial sample, and then if we find any evidence of wrongdoing, then we keep expanding the sample size. So discovery sampling is a pretty common technique that investigators use. And then the investigator also needs to document the methodology that they use to make their sample. Was it a random sample? I mean, ideally we want to take a random sample, sometimes we might have a reason to take a block sample. So instead of randomly selecting the journal entries, we take a block of journal entries, from a period of time that we think might be suspicious. But we ought to be able to document why we use the methodology that we did. Then we want to be able to evaluate the errors. So if we find an error and it looks like Scrap had some missing documentation, then we have to find out, is this indicative of fraud or did somebody just make a mistake? And if we find a situation where it looks like somebody just made a mistake, we may not actually be concerned. But there's also the possibility that our sample wasn't good. So whenever we take a sample, there's always sampling risk. So if there's 100 debits to Scrap expense and we looked at 20 of them and didn't find any errors and we stopped sampling, then we may have come to a wrong conclusion because we just, out of the 20 that we sampled, we didn't find the actual fraudulent journal entries. So there's always a risk, which is sampling risk, which is the risk that the sample did not represent the population. That if we had looked at all 20 of the debits to Scrap, we would have found that maybe 10 or 12 of them, for example, were actually fraudulent journal entries where they weren't authorized to write off Scrap, and that was actually stolen inventory. But because we randomly selected the sample and we didn't do 100% testing, we actually just got unlucky and selected a sample that didn't have any of the fraudulent journal entries in it. That's always a possibility. And the way that we reduce that is obviously to take bigger samples. If we took 100% sample, there would be no sampling risk. But so we want to use the appropriate sample size for the population that we're considering. That'll reduce our sampling risk. The other risk that comes into play is non-sampling risk, which is just human error. So the fraud was there. They were just really good at covering up. We were tired. We didn't notice that it was a photocopy that had been altered. Right? So anything that can reduce human error can reduce non-sampling risk. So careful planning, careful execution, the performance of our analysis, and then careful evaluation of the sampling procedures that we're actually using. So anything that reduces human error potentially reduces non-sampling risk. So what about hard to get documentary evidence? So like we mentioned in the previous chapter, web-based email accounts. Well, we'd have to get a subpoena for that. So we have to be able to show the court that we have reason to believe that a fraud's occurring and that we should be able to subpoena those records. Private bank records are the same thing. If we can ask the employee to turn it over themselves, but without a subpoena, we can't get that. Right? Same with tax returns. Our brokerage records, that we can't call the broker and get that, have them send those records to us if it's a private account. So what we need to do is either get a subpoena, get a search warrant from authorities, or just get the person to voluntarily consent. So maybe the person didn't do anything wrong, and so they just give us their consent to look at their bank accounts. And so even if somebody did something wrong, they may actually give us voluntary consent to hopefully throw us off the track. They feel like they're cooperating. So the first thing we do is just ask them if they'll give us that consent. And there's an example here on the slide of what a consent authorization might look like. But absent them giving us their consent, then we have to go to law enforcement and get a search warrant or a subpoena to get the private documents. And then another thing that we can use is we can hire document experts. So it may be that we have a photocopy document that looks very much like an original, but if we hired a document expert, they can examine that document and determine whether it's been forged, whether there's been alterations. Right? They can also look at handwriting to help it determine if it's been genuine. They can look at a document. They can look at two documents and determine if they've been printed on the same machine. I've seen cases where they've looked at the ink on the document to show that the ink that was used was not actually as old as the document itself. So it looks like they subsequently signed documents or forged documents with at a later date. Right? So document experts can tell if two or more documents are significantly different or substantially the same, or if there's pages from a document have been substituted within a document. So again, these fraudsters are very sophisticated, and they're pretty good at photocopying, pretty good at making altered documents look like originals. And that's where document experts who have been trained for this type of thing and generally have a background in law enforcement can uncover these irregularities and signs of alteration that a document has been forged or is not an original. And two well-known organizations for document experts are the FBI, obviously, and then there's the American Board of Forensic Document Examiners, who also do this type of work. And so occasionally we have to bring in specialists from one of these units to help us in our fraud investigation.